Welcome to Bears in Exile. Today is May 10th, and we're going to take a look at SLV. And here we have SLV, and it is a mirror of AGQ. It's just AGQ is much more expensive, but SLV has been the one that has dominated the news, and so we had the awful crash of silver in the preceding week, and we did have this uptick right here 2 days ago, and that uptick gives us a target of $40, one hair above $40, so I'll just call it $40. But so to fix this bubble, we do need to hit $40 for a proper correction. And it probably has much more than that, and I'll explain. Well, for one, we have the short-term moving averages, and they are, of course, massively bubbly. That extension there is pretty ridiculous. But beyond that, what can we tell? Well, we can tell that the long-term moving average, although it has sustained a little bit of damage, really hasn't been knocked around that bad. It still is looks extremely strong, and we have further clues. We did not have full crossover before entering into the bar, which gives it weight that it is going to be sucked back through it. And as a matter of fact, not even all of the moving averages have even entered the bar, much less completely separated and entered together. So, this looks really weak, and it's at 37.52. I'll be watching for 40. At 40, it will have to decide what it wants to do. A flat line, bounce off of it, etc. If we look at the secondaries, they're not going to tell us much of anything except that they're really low. So. Not much of anything to see there, although we do have a couple small upticks in the MACD histogram, but I think silver looks very attractive there, and we can tell by the short-term moving average that this is not as drastic as they're making it out to be. And if we look at the shorter-term time frames, we can see that on the 15-minute we had a complete crossover. It put the hurt on the bar, busted right through it, and the long-term moving averages are becoming bullish and strengthening. And we do have somewhat of a flat line on the short-term moving averages, which after a gap and everything makes sense to me. On the 30-minute, once again we can see we have complete crossover prior to entering the bar, and it has put the hurt on the bar, it has exited the other side of it, and the bar is compressing to go into a flat line and presumably a flip. So this one still does need to do a little bit more, but it definitely is off to a grand start of turning this back bullish on the 30-minute. And on the 60-minute, though, this is kind of the odd man out. The bearish long-term moving averages are still majorly in effect, and although we do have complete crossover prior to entering the bar, this gap made the short-term moving averages look all wobbly and everything, and I don't care for that. But and the 60 minutes certainly has a lot to prove. But all the other time periods, I would say, look pretty good for the bulls. So overall, silver looks very nice to me. And although we don't have any real predictive stuff except for that $40 on the other time periods, because this one was already met. You know, all of the other time periods have already been met for bubble correction. So, well, there you have it. There is silver, and definitely does not look like such a disaster like the news is trying to spin. As always, all investing decisions are your own. This chart is for entertainment, educational, and consumption of time purposes only.